Goldman Sachs, the Wall Street behemoth, has long been hesitant to embrace the world of Bitcoin and other cryptocurrencies. However, recent developments suggest a shift in their stance, culminating in the potential launch of a Goldman Sachs Bitcoin ETF. This article delves into the intricacies of this potential launch, analyzing its implications for the crypto market, traditional finance, and Goldman Sachs itself. Despite its initial skepticism, Goldman Sachs has gradually dipped its toes into the crypto waters. In 2018, they established a cryptocurrency trading desk, catering to institutional investors. In 2021, they launched the Galaxy Digital Bitcoin Fund, an over-the-counter, OTC, product for accredited investors. While not directly holding Bitcoin, the fund tracks its price, offering traditional investors exposure without venturing into the crypto exchanges. However, a Bitcoin ETF represents a significant step forward. Unlike the OTC fund, an ETF would offer broader access, allowing retail investors to gain exposure to Bitcoin through their existing stock brokerage accounts. This potential move reflects several key factors. Maturing crypto market, Bitcoin has demonstrated remarkable resilience, overcoming numerous crashes and regulatory hurdles. Its market capitalization stands at over $800 billion, making it impossible to ignore for any major financial institution. Institutional interest. Major asset managers like BlackRock and Fidelity have already launched or filed for Bitcoin ETFs, indicating growing institutional appetite for the asset class. Goldman Sachs wouldn't want to miss out on this potential revenue stream. Regulatory developments. The SEC, under increased pressure from the industry, might finally approve a spot Bitcoin ETF in 2024. Goldman Sachs is likely positioning itself to capitalize on this potential regulatory green light. Potential structures of a Goldman Sachs Bitcoin ETF. There are multiple ways Goldman Sachs could structure its Bitcoin ETF. Physical Bitcoin ETF. This ETF would directly hold Bitcoin, storing it in secure cold wallets. Investors would benefit from direct exposure to Bitcoin's price movements and potential appreciation. However, this structure poses security and custody challenges, making it the most complex option. Futures-based Bitcoin ETF. This ETF would track the price of Bitcoin futures contracts traded on regulated exchanges. This is a simpler and more common structure, but it exposes investors to potential basis risk, where the ETF's price deviates from the actual price of Bitcoin. Synthetic Bitcoin ETF. This ETF would rely on swaps or other derivatives to replicate the price of Bitcoin without physically holding it. This is the least transparent option and exposes investors to counterparty risk, the risk of the swap provider defaulting. The choice of structure will have significant implications for the ETF's risk profile, fees, and investor appeal. Goldman Sachs' decision will be closely watched by both traditional and crypto investors. Impact on the crypto market. A Goldman Sachs Bitcoin ETF has the potential to be a game-changer for the crypto market. Its launch could trigger several positive effects. Increased liquidity. The ETF would bring in substantial new capital, boosting liquidity in the Bitcoin market and potentially reducing price volatility. Enhanced credibility. Goldman Sachs' involvement would lend legitimacy to the crypto industry, attracting larger institutional players and boosting mainstream adoption. Investor education. The ETF could act as an educational tool, introducing a broader audience to Bitcoin and its underlying technology. However, concerns remain. Regulatory uncertainty. The SEC's stance on Bitcoin ETFs remains unclear, and even approval could come with stringent conditions. Manipulation concerns. A large, centralized ETF could potentially be used to manipulate the Bitcoin price, raising concerns for fair market practices. Price volatility. Bitcoin remains a volatile asset, and the ETF would expose investors to this inherent risk. Overall, the impact of a Goldman Sachs Bitcoin ETF is likely to be positive for the crypto market, but it's crucial to consider both the potential benefits and risks. Impact on traditional finance. For traditional finance, a Goldman Sachs Bitcoin ETF represents a bridge between the established financial system and the burgeoning crypto world. It could lead to new investment opportunities. The ETF would offer a readily accessible way for traditional investors to incorporate Bitcoin into their portfolios, diversifying their exposure and potentially enhancing returns. Technological innovation. Traditional financial institutions may be compelled to develop new products and services, catering to the growing demand for crypto exposure. Regulatory collaboration. Increased institutional involvement could prompt regulators to develop clearer and more robust regulatory frameworks for the crypto industry. Impact on Goldman Sachs. For Goldman Sachs itself, a Bitcoin ETF represents a strategic move with both potential rewards and risks. Revenue generation. The ETF could generate significant fees from management, custody, and other services, boosting Goldman Sachs' profitability. Enhanced brand image. Successfully navigating the crypto space could enhance Goldman Sachs' reputation as a forward-thinking and innovative financial institution. Attracting talent. Involvement in the fast-growing crypto industry could attract and retain top talent, giving Goldman Sachs an edge in the competition for skilled professionals. However, challenges and risks also exist. Reputational damage. If the ETF performs poorly or encounters regulatory issues, it could damage Goldman Sachs' reputation and erode trust with investors. Internal friction. Integrating crypto into their operations might necessitate internal changes and could face resistance from traditionalists within the firm. Regulatory scrutiny. As a major player, Goldman Sachs will likely face greater regulatory scrutiny, requiring careful navigation of complex regulations. Ultimately, the success of a Goldman Sachs Bitcoin ETF will depend on several factors, including the chosen structure, market reception, regulatory environment, and Goldman Sachs' own execution capabilities. The road ahead. The potential launch of a Goldman Sachs Bitcoin ETF marks a significant development in the ongoing convergence of traditional finance and the crypto world. While uncertainties remain, the implications for the crypto market, traditional finance, and Goldman Sachs itself are potentially far-reaching. As the regulatory landscape evolves and investor demand continues to grow, the next few years are likely to see further advancements and challenges in this dynamic space.